This Friday, 17th of November. Today I'd like to talk about the October inflation update. So what happened over here is the latest Consumer Price Index report, right? CPI published by the Bureau of Labor Statistics today, indicating a notable decrease in inflation to 3.2%. Okay, this is what we got. So here's an overview of the key figures. The annual CPI came in at 3.2%, slightly below the forecast of 3.3%. On a monthly basis, CPI showed no change against a predicted increase of 0.1, no change, right? So the core CPI, which excluded volatile food and energy prices, rose by 4% over the past year, but just under the anticipated 4.1%. And the month-to-month, the core CPI increased by 0.2, which was less than the 0.3 forecast. So these figures right now see that the persistent inflationary pressure might be loosening. The keyword here might be, we need to see more months, at least another month. But so far, it's encouraging. So it's potentially allowing the Fed to pause its interest rate hikes. And why do I say so? Is because the probability of maintaining current rates has surged from 69.6% last month to right now 97.4%. So this reflects a growing confidence in the stabilization of the economy so far, right? So the Federal Reserve Chair, Jerome Powell, has tempered optimism. You know, that's his style. He wants to be on the safe side. Optimism with caution. He suggests that, despite everything is working, inflation is easing, the Fed is still not fully persuaded that inflation is on a consistent downwards trajectory towards their 2% target. And he has warned that, they are ready. They're ready anytime to implement further rate hikes should inflationary trend not show sustained improvement. So I think this is they are going to continue saying this thing, but the market is just not buying it, because if you had a look, right, I think past few reports already said that the probability of a rate hike this year is still not there. Has always been higher than or near the border, or higher than the 70% border. So if there's anything, probably January, February next year, we'll see if inflation continues to stabilize and come down. Probably we're not facing any rate hike. But anyway, exacerbating market concerns are the usual things that's happening right now, that is, i.e. the geopolitical tensions with the ongoing conflicts in Ukraine and Gaza. So this raises the specter of increased oil prices. There's this possibility, which could fuel inflationary pressures anew. Right now, we are seeing oil prices coming down. It's near to 72.50 already today. So probably that might ease a bit, the situation. But we can never know. Nevertheless, there's a beginning sentiment that the Fed may hold its rate hikes. Okay, so this is the sentiment that the general market is feeling right now. That's why you're seeing that even the stock market is celebrating it. So encouraging signs from the labor market indicate a response to the Fed measure. I'm referring this very much to the non-farm data. So that this labor market has been weakening, so it's like correcting the imbalance between the supply and demand that's been fueling the inflation so far. And to top that, we have seen wage growth decelerate over the last 18 months. So while productivity has shown an uptick this year, factors which could elevate inflationary pressures. So with this, I think we are probably seeing the rate cut, the focus is towards the rate cut. If by January inflation remains muted, So I think the focus would be the rate cut, and that's expected in June 2024. Okay, because like it or not, the whole US economy is based upon low interest rates. Okay, cheap borrowing, the kind to fuel the economy. So at current elevated levels, right? I think the politicians in the US would not be happy. The Fed also would not be happy to maintain the rates for a long time, especially politicians, right? Because majority of the money will be going to servicing the debts rather than giving them more money to spend so they can maintain their power. So this is something that's the reason I said that the Fed, there are sentiments, by the Fed saying that probably they maintain, if possible, they would like to maintain the high interest rates for the whole of 2024. At this current moment, chances are not high they can do that, but we'll see from a quarter to quarter basis. But for now, expectation is that rate cut will happen in 2024, mid 2024. Okay, so with that, that's the end of the fundamental report for today.